Look at the moves from Meta and Apple, Alphabet, and Amazon since Monday. There they go. Amazon's the biggest question mark, perhaps, after those earnings numbers. Stock only up 1% on the week. It does beg the question, does the rally have more room to run? Let's ask George Seay of Annandale Capital back with us today. So how do you feel, George, after all of these reports are now on the table?
Well, Scott, as we all saw today, and happy Friday to you, they were very mixed, and some of them were better than expected, and Meta was euphoric, and then you got Amazon as kind of a disastrous one here today. So it's a real mixed bag. There's a lot of headwinds to tech stocks, whether it's multiples, whether it's the Fed still on the alert, whether it's the economy still softening despite the employment report today. But the market wants to rip higher right now. And the fact it didn't go down very much today after two incredibly strong days back-to-back was very impressive.
You know, Meta especially, right? I thought maybe we expected to give back after that huge run, and it just really didn't happen. But you going in thought that this rally had gotten a little bit ahead of itself, right? I mean, that's fair to say, isn't it?
I still feel that way. I think the market's going to chop a lot this year, and I think everybody should just enjoy these tremendous gains we've had in the last few weeks and the first month of the year, as long as they last. But I think they're going to give back at some point. There's just too many headwinds.
Did you sell anything? Did you take any profits on the Meta pop, for example?
I was begging my team to sell some Meta and to write some call options against it, but we didn't do that. We wrote some calls on some other stocks, and I've still got about a half of my growth stock position I don't put on, but I would have put it on at a lot lower prices.
I mean, that's the interesting thing in which you told me before when we spoke about this move in tech to start the year. Is whether you are going to get that chance to buy things lower, and if so, if you're going to get the chance to buy them as low as you'd like. Those are two different questions. Do you think you will?
I think you'll definitely get a chance to buy lower. To buy as low as I'd like, I'm pretty picky and pretty stingy, so they may not go down as far as I want or as far as some of the uber bears of the market. You think we're going down another 20 to 30% while, but I'm going to be disciplined in here because I still remember watching Microsoft flatline between 2000 and 2017, a 17-year period with a whole lot of volatility in the interim. And I don't think we're going to do that again, but I think we could have a multi-year workout period where we've got a lot of chop for 2, 3, 4 years. And I think you can afford to be disciplined and wait for your price points.
Which one are you looking at more than any other to perhaps add to? Because you really have a full slate, whether it's Alphabet or Meta, Amazon, Apple, Qualcomm, Microsoft. I mean, you're really spread across the board here.
I'm pretty well positioned in Qualcomm and Apple. I think Apple's a lifetime hold. I really don't ever sell the stock. I do write some calls, but I'm really focused on Amazon and Google right now. I think that I love weakness in great companies, and they're both acting pretty weak, especially Amazon right now. So I need lower prices, but I want to add to both of those significantly over the next year or two.
I hear you.